We are in 2023 and I am sure you have learned a lot in 2022 with respect to your investments and you have grown as an investor. So now I generally don't like to share the view for the market, but depending on the questions that I am getting, I thought it would be much easier for me to share a view for the market for 2023. So there are multiple opinions and I would like to discuss each of them in brief. So let's begin. Generally, I am a mid-cap investor, so I don't focus too much on the market as a whole. But there are few viewpoints that people share with me and want my opinion on. So one of the viewpoints about Nifty is we have 7 years of positive returns in Nifty, and so people expect a correction in the market in 2023 and they want my views on the same. Similarly, there are a second school of thoughts who look at, say, a mid cap index or a small cap index and say that the mid cap index has not performed as good as the Nifty, or small cap index has not performed as good as Nifty. So they expect very solid returns from the market in 2023. And again, they want my view. So let me just clarify all those points in brief. So first, I generally don't like to focus on market as a whole. So I like to focus on companies that I have invested in, and I like to see their earnings growth. And if there is an earnings growth, sales growth in the companies that I have invested in, sooner rather than later the stock price will appreciate. So there is nothing wrong in having a view only about those companies, because that helps me save a lot of time, because there are a lot of things that can impact say a Nifty performance, because there are many companies listed in Nifty. Some may have earnings growth, some may not have earnings growth. There are PE ratio of the earnings of the Nifty companies and their PE expansion, PE contraction. So generally I don't like to go for a market view, but I have changed that stance because I have been getting a lot of questions. So now there's a website called Prime Investor, and that has given 20 years yearly return of Nifty. So if we look at that, the best Nifty performance was for a 7 straight years of positive return since 2002 to 2007. So since 2002 to 2007, we see a positive returns for Nifty, and then in 2008 we had a crash of more than 50%. But we have to see that the prior 3 years the returns was 36%, 39% and 54%. So that was a solid returns in the Nifty. So it could so happen that the earnings were not compounding at the rate at which the Nifty was going up, and so the correction happened. This time we don't see such a stellar performance, though we have 7 straight years of positive returns. Only 2 years have been past 20%. So one of them was 28% and other was 24%. 3 out of those 7s are under 5%. So 3%, 3% and 4%. So out of those 7 years of good performance in Nifty, 3 of them are just under 5% performance. So they are not considered as a very good positive returns, but yes, they are positive for the stats. 2 years of great performance and 2 years of mediocre performance. So if we look at that 7 years as a whole, I don't see a big correction coming in 2023. There are 3 chances that can happen: a big correction, no big correction and sideways. So now I can see a big correction only if there is no earnings growth in Nifty. So if the EPS of Nifty doesn't touch 900 in 2023, we can expect a correction. If the EPS touches 900 and there is an expectation of 1000, then there will be a good returns from Nifty as well, because it will be the Nifty will start expanding. And if there is either or, Nifty is the earnings of a Nifty is not reaching 900 but is expected to reach 900 and is expected to reach 1000, then there will be a sideways movement. the past performance or past yearly performance doesn't guarantee that you will have a sixth year of or eighth year as negative return. Even if it is negative, it will not be hugely negative like 50% correction or 30% correction like we had in 2008, because there is an earnings growth, and Nifty is of course overvalued as compared to other emerging market, but the overvaluation doesn't is not in order of a 50% correction. It can just go on sideways another 2-3% for 1 year or 4% for another under 5% 1 year return, or it can be a negative 5% for this year. So there is very little that we can decide right now, but the most important factor would be the earnings growth in the Nifty companies. That will decide how the Nifty performs. Still, if you want to be making money from the market, you should not focus on Nifty or an index. You should focus on the companies that you are invested in. If you are invested in a Nifty index ETF, then you can focus on what would be your return from that index fund for that year. But if you are not invested in index fund, you should focus more on companies that you have invested in. So as an example, there will be companies who would grow at say 20%, the earnings will grow at 20%, but the stock price may not move 20% because it has already moved up or moved down. So you have to look from earnings growth and what the price you are paying for that earnings growth, or how much of that earnings growth is already in the price, and then if you invest, you will make money from the market.